It's a Top That Trade Day. Joining us now for some fun and games, Alan Nuckman, the market strategist at St. Paul Research, and Phil Flynn, a Fox Business Network contributor. Here we go, guys, with round number one, Tulip Times. Back in the 1600s, there was a famous market bubble crash called Tulip Mania in Holland as people poured money into tulip bulbs. History often repeats. How do you beat a bubble burst?
This is not new. That's the lesson to be learned. So this Bitcoin backing off, I don't even know if it's a burst, but we've seen a lot of markets have big booms. The key is not to be the last one in. And back in Tulip Mania, you could get a whole handful of assets for one tulip bulb. You could get wheat, rye, swine, sheep, ox, wine, the whole deal. So like I said, this is not new. It's about money management. It's about not going with emotion. Trade what you see and what the markets are telling you, not what you think. That's where people get in trouble.
I have trouble with tulips because I had some beautiful tulips and some deers ate them, so I'm very upset with tulips right now. So don't invest in tulips, whatever you do. But I will tell you this, it's very difficult to find a bubble when you're already in a bubble. You know, some people say the U.S. stock market's been in a bubble for the last 10 years, right?
And
but it continues to go higher, and it can get bigger. You know, of course, when it pops, you know, the bigger they are, the harder they fall. One of the concerns right now, of course, has been bubble talk about cryptocurrencies. You know, we saw that huge correction when China started to crack down on cryptocurrencies. It brought down the entire stock market. But why does the stock market care, really, you know, if cryptocurrencies are sold in China? So that's an opportunity. When you see something like that, when one bubble pops, there's an opportunity that pops up somewhere else.
Round number two, Oh Canada land grab. Canada's housing market is running hotter than just about anywhere in the world. Bill, you picked the Canadian dollar for power last week. This week, pick a play, EWC, the Canadian stock ETF, or XHB, the home builders ETF.
You know, I have to look at Canada and say, come on, you're running out of land, please, right? There's not enough land to build in Canada. It's huge. It's just that nobody wants to go that far north. It's cold out there, right? You know, you want to get into southern Canada. That's the place to be. You know what? When we look at the Canadian economy right now, I think what you want to look at is oil production. The U.S. is pulling away from oil production, and Canada, of course, is increasing their production. So Canada really is the place with oil. Interestingly enough, the International Energy Agency came out and said that the only way that the world is going to meet its carbon goals is to stop investing in all fossil fuels. You think that's going to happen? I doubt it. I'd go long Canadian oil.
All right, so let's talk about technology. That's another story for another day that will alleviate some of the carbon issues. But looking at these, being a trader, XHB is 10% off its highs from just 2 weeks ago. It had gone from 40 to 80, so it's a bit of a pullback. It's up 200% off its 2020 lows. So that sector has been strong. Canada, the prices of homes have tripled in Toronto in 15 years, whereas they normally double every 25 years. Canada's stock market, believe it or not, is twice as strong as the S&P, so it's up 20% this year. So that may be why people are having a little bit of a wealth effect, and they feel they can buy more. But if you look at the Canadian ETF, you can see this rally from 20 to 40 has traded in that range since 2005. That target's 60. So there's still more upside. I wouldn't say either one of these are in a bubble, but you want to be looking at them when they back off. And the key to trade things that you think may be in a bubble is don't use leverage that can be used against you if the market backs off that forces you to add more money. Pay for your positions in full.
Here's your round number three. Burry bet that famous Big Short investor Michael Burry is bearish on Tesla. He's betting against that stock. But using your trader smarts, guys, what can be learned from that awful market housing crash?
Well, what I've learned, it's not what you trade, it's how you trade. Now, what they did in the housing crisis in that Big Short movie is they kind of made things more complicated than they need to be. They should have just bought S&P puts. So what I think Michael Burry has learned is just use options because they're very easy to get into and out of. He's got 8,000 put options on Tesla. Tesla had dropped from 900 to 600, so maybe he made some good money there. But remember, it still was at 200 last summer, so it's still way, way, way up there. So he's got limited risk. He can get in and out of his options very efficiently. He's using in-the-money calls to act like stocks on the downside, so he has limited risk with these options. He also has calls in Google, CBS, and Facebook. So he believes in the markets. He just, in this particular instance, is using options as a tool, which I think is great.
Yeah, I think so too. But, at the same time, it's not when you get in the markets, when you get out of it. The streets are littered with people that tried to short Tesla, right? That are laying down, run over like a rock. But his timing, was everything. He put it on after the stock had an extended run. You'd only needed a couple of tweets to break the market back down. And so it was timing with that. And he wasn't as committed as some of these other players. He wanted limited risk, right? Because he did have these options. Had he done, the short selling of the stocks, that shows his level of confidence. Now, the key is when you get out. Options are a ticking time bomb. So if he hangs on to them too long, they're going to start dwindling in value. So it's going to be very interesting, not so much that he got short, but when he's going to cover that short.
Right. He did buy in the money options, the very expensive options that act like the stock. So he doesn't really have to worry about the time decay, but he'll have to make a decision if and when they come to an end.
On to the bonus round question for today. As more Americans get the COVID vaccine, including the both of you, the masks are coming off. What item is seeing an 80% spike in sales? Will it be lipstick, face cream, or toothpaste?
Well, it's lipstick. You didn't even need to read the list. It's got to be lipstick.
I have to agree with him. It's not toothpaste. I think toothpaste sales went up when you had to wear masks because you could actually smell your own breath. So it's got to be lipstick.
Well, there's some truth to that about toothpaste, Phil. But great job, guys. The answer indeed is lipstick. Sales are up. You both win, and so do we. Business First AM will be right